Well, first of all, I don't believe it's financially possible now to do tax cuts, given the fact that the deficit is now increasing at almost a $3 trillion a year level. We are really getting to a point within a couple of years now, not 20 or 30 like it used to be, but just a few years from now, where it could become quite challenging just to pay the interest on our debt. And to now say that we're going to cut taxes and lower income to the country where we continue to spend far more than we take in is really apprehensible to whoever it may be, whether the Republicans or Democrats do that. And I think the big thing we should look at in this entire debate from both sides, there was boo about the debt and deficits. Just, it's like no one cares, doesn't matter. Print a few more trillion.
Think. Act. And prosper. You are now tuned into the Money Level Show.
Hey everyone, welcome back to the show. We are here with Peter Grandich again. How you doing?
Oh, I was just waking up. I was watching the debate. What happened?
Yeah, it was definitely disheartening, and for me, I'm the type of person, I try to have compassion for people, and I really felt like hey, yeah, Biden is not there. Like he couldn't finish a sentence. It was just, the debate, just how, even Trump was just very, articulate, and he was able to put up an argument. He was able to take some jabs, and just like it was almost like one of those boxing matches that you watch, and you're just like, yeah, this is just gonna be a no brainer. Like the Canelo Alvarez is gonna just demolish this guy, And so it was heartbreaking, just seeing the mental, like the diminishing of the mental health, there. So
The
yeah.
bigger question in that, Darryl, sorry to interrupt you, but the biggest thought in that is this wasn't the first time people were realizing it that's on his side. They've known it for a long time, and this has been put onto this. And I want to go on record again. My record will show it. As early as late last year, I was saying I did not believe Biden would be on the ticket come election day. And people say, oh, I think after last night, they're going to give consideration to that. And now I'm going to add to that. I also think that he will use any thought of not proceeding to be the nomination, but filling out his term in order to assure the pardonability of his son, his brother, and eventually himself. And the people now go, that's all crazy. Just as it was crazy to think he wouldn't be on the ticket come election day. And if you listen to the pundits this morning, especially from the Democratic side, they're all but screaming for that now, for him to step down and give up the nomination and, have a convention and Newsom or somebody, whoever it may be and all. And if that is the case, which I think it is, I believe for what his family has done, and it doesn't mean that Trump isn't guilty of something. I'm just focusing on the Bidens at the moment. He'll use that as leverage to make sure that his son is already convicted in one, facing a much more challenging trial in September, which could ramifications be even more from a sentence. His brother is also facing that. And of course, who knows what he may end up facing once he's not president. And I think that's where his leverage is going to be. So we'll see.
How did this play out with Reagan? So Reagan, I think Reagan's last year in office. I was just born. I was born in '88, so I think that was his last year. Um, and I know that there was like a lot of talk about his mental health kind of diminishing in his later years. And you
Yeah,
had
but it
that.
was, it was Darryl, to be fair, it wasn't anything like we've seen for over a year with Biden. I mean, uh, when we knew, think about this, and then maybe we'll move on to something else, but I think it's important. The man had to take a week to prepare for what you saw last night, forgetting what you ended up seeing. Imagine if Roosevelt in the time of war when he had to go and meet Stalin and Churchill on such a key factor to the world that he had to take a week off and not do anything. Or Kennedy during the Cuban Missile Crisis had to take a week off and go somewhere to figure out what to do. You have to ask yourself if that's what he had to do, and the net result of what you saw last night was the case, you'd have to be a little nervous between now and his end of term. If another major crisis happens, what's his ability to do it? It's obvious now that he has not been doing it alone. And I think it's pretty obvious to people he may not have that much influence. That's why he would always say, if you remember now it's easy to look back at things and he would go, oh, this is what I'm supposed to do, or this is because he's being led. He's not leading. And you want still somebody who's still one of the most important people in the world, if not is, in this clearly reducing capacity. So I think in the back of our mind, one, we should look for a new candidate likely, but we should also be very concerned about the makeup of his diminishing ability to function. And we still have several more months for him to finish out this term, even if he does remove himself as the next, as a candidate for the next presidency.
Mm-hmm. Yeah. A lot of a lot of concerns there. There was a lot of talk about tax cuts and many other things, and I'm kind of wondering what implications does this have for markets moving forward. Obviously, big corporations would. It seems like there's been a lot of talk with. I think Elon Musk has met with Trump, and there's been talk about corporations, not wanting these huge amounts of taxes and such. And so, like, I'm just kind of wondering, like, from a investor standpoint, what does this look like for markets if Trump is elected? Time out. Quick break in the action. This message is brought to you by the Rule Symposium. This annual symposium is hosted by the legendary investor Rick Rule himself. It will take place from July 7th through 11th in Boca Raton, Florida. Mr. Rule invites some of the most brilliant minds in macroeconomics and natural resource investing. This year, featured speakers include Danielle DiMartino Booth, Nomi Prinz, Jim Rickards, Grant Williams, Lobo Tigre, and more. Rick even organizes the Living Legends panel where he invites individuals who have built billion-dollar businesses from scratch. Attendees will be introduced to a myriad of companies active in the natural resources space, with the companies invited being the ones that Rick Rule invests in himself. The symposium is held at the Boca Raton, which is an amazing resort with exceptional amenities. I attended in 2023 and thoroughly enjoyed my time there. I went on an amazing cruise with Rick and other investors and CEOs of companies, and even had the opportunity to test drive an Aston Martin for the first time. So don't miss out on this opportunity to have fun and receive high quality education to help secure your financial future. Click the link below to sign up, and I promise you won't regret it. But if you do, Rick offers an amazing money back guarantee. So what are you waiting for? Click the link below to sign up today. Now, without further ado, let's get back to the content.
Well, first of all, I don't believe it's financially possible now to do tax cuts, given the fact that the deficit is now increasing at almost a $3 trillion a year level. We are really getting to a point within a couple of years now, not 20 or 30 like it used to be, but just a few years from now, where it could become quite challenging just to pay the interest on our debt. And to now say that we're going to cut taxes and lower income to the country where we continue to spend far more than we take in is really apprehensible to whoever it may be, whether the Republicans or Democrats do that. And I think the big thing we should look at in this entire debate from both sides, there was boo about the debt and deficits. It's like No one cares. Doesn't matter. Print a few more trillion. But it's going to matter. And where it's mattering is we continue to see wholesale exit of key former buyers of our debt, namely China as one, to the point where America is going to have to find some way of becoming the premier financer of its own debt. And that's when we get into monetization and hyperinflation and all those arguments that are out there. And they're very valid arguments. And so I don't believe in the tax cut. And let me just add one thing there, if you don't mind. The single biggest asset that the US has on its books is student loans. Now, most people don't know that, but it is about 27% of our assets. So we had a president, and hopefully it's been stopped now. Supreme Court looks like is preventing that, but was prepared to forgive hundreds of billions of dollars of this student debt. That is an asset that if it was reduced, that'd be that much more deficit that we'd have to raise taxes for to make up for income that's no longer available and all. There is not one known major bill on either side to balance our budget. Darrell, we haven't had a balanced budget in Congress since Clinton was president. So Democrat or Republican doesn't have a leg to stand on. Can you imagine you or I functioning over the next 20, 25 years, not balancing our home budgets or our business budgets? Where would we be? In the poorhouse. That's what the United States really is. And what's happening now is, and I was telling you before we got started, the biggest thing that Wall Street will have blown in my career, I believe, and now in my 41st year, is the misunderstanding and misguidance to not recognizing what is transpiring with the formation and growth of these BRIC nations. And we're going to come this fall and see it's no longer just 5 or 10, but it's 30 and 40 and maybe even more. And we're going to learn some of the advances they made on how they're going to trade and what they're going to use to trade and how banking and monetary conditions are going to play. And the United States is going to be outside looking in at a time where the rest of it's is having its own issues. So there's a lot more that needs to be debated than what we just heard about last night. But one of the things that's detrimental to it is there's no movement at all to balance our budgets or at least prevent further increases to the levels of debt that we're incurring.
Mm-hmm. Yeah, yeah, definitely. Yeah, that's that's very concerning. So the BRICS, they're meeting later this year, and there's been talk, about a gold-backed currency. We know that many of those nations have been buying a lot of gold. I think India took some of their gold back from London. I think that's what I read about. And we see like central bank buying over the last few years has been significant. And so what are you seeing for gold on that front? I mean, it seems like gold is being the true sticking to its true purpose of being God's money. I mean, Genesis is in the book of Genesis. There was gold in the land, and it was good, right? So it just seems like it's living up to the purpose.
Well, that's been my argument against the cryptocurrency nuts. That's something that worked for a couple thousand years versus something that worked partially for a handful for a few years is a much better choice. Gold 2,000 years ago bought a suit, paid for food, and got you a dwelling. And it does that today again for what the costs are. But you're right. Not only was central bank buying enormous, but countries have been demanding and asking for its gold back that the United States held. And some countries have now waited 7 or 8 years to get it back. And that always has begged the question in a very small, minute, hard asset camp. Why is the United States taking so long to return gold that they were holding for other countries? Maybe it's because they don't have all the gold that we once thought was in Fort Knox, whatever. But that's not as anywhere as important as the fact, as you brought out, that many of the countries that are in the midst of this BRIC movement have also been major buyers of gold. And there's already been public statements by various current members and countries that are considering coming members how gold is going to play some role. We don't know yet it would be, and we still may not know fully come this fall. But it's clear and evident that they haven't done this for a trade. They're not doing it for speculation, and they're clearly moving against what has been the world-renowned reserve currency, the dollar. And let's face facts. If you really take apart the G7 countries now, they're all in a decline. Look at the United States and Canada for a minute. They were the world's two biggest trading partners. 20, 30 years ago, they were it. I mean, more trading took place between them than anybody else. Both countries are in a decline socially, politically, and economically. One got rid of all its gold knowingly. We know Canada doesn't have any of it. Still suspicion that whether or not the United States still has its own. And yet, where gold is being accumulated is where we're seeing growth, particularly in Asia. So, I know there's a cult out there that thinks cryptocurrency somehow you feel better with something on a ledger out in cyberspace versus something you physically hold and it can hurt your foot if you drop it. And it's worked for a couple of thousand years, but I still believe gold is. And one other thing that is terrible that the financial service industry doesn't even know the correct answer to this. But if you talk to the average financial advisor in the US right now and said, name me the tier one investments in the world that is considered the best investments, they'll all say stocks and bonds. But they forget a few years ago, gold was added to that equation. And it's looked upon as the same and equal. In fact, gold has now outperformed the bond market over the last 50 years. Think about that. We were trained when I entered this business 41 years ago. Yeah, you can speculate in stocks, but when you want safety, put it in bonds. And yet gold has now outperformed that group. And yet, how many times do you hear during the course of a day on any financial service commercial or anything, hey, you guys should own some gold? Nope. It's the most mistreated, misunderstood, and discarded all-purpose investment to own ever in the history of mankind. And I don't sell it. I don't advocate it. It's not something I have any relationship with people that do. But I'll tell you this, I always say this, Darryl, when we sit in our planning group of people, hey, Mr. and Mrs. Jones, or whatever their name may be, I think you should own some gold and hope it don't go up. Darryl, I always say this, people laugh, they look at you and go, Mr. Grandich, why would you want me to buy something that doesn't go up? Well, looking at you, basically your whole life's in financial assets. Trust me, if gold's gone up a lot, your financial assets went down. So treat it as insurance. We all have home insurance. We all have car insurance. Most don't hope our home don't burn, and we don't want our car to be stolen. But if it is, we want something to offset it. And that's where gold needs to play a role, no matter what the price is, for most people who have little or no exposure to it.
Mm-hmm. And what are you seeing for price action? I mean, we've been trading in the range between 23 and 2400 for a while. Usually, assets will rise significantly. I think gold went up to about 2450, close to there. And then it's come down a little bit, but it seems like it's building another base for a leg up. That's kind of what I'm thinking. What's your take?
Sure, as you and I speak on this last day of trading, I made a post early this morning on my X page that when we hit 2450, I told people it's time to take 5 to 25% off of your gold holdings, keeping in mind that we were buying it from 1300 and that there would be this correction and consolidation, and it's needed, it's necessary. And if you want to believe in much higher prices, far past my long-term target, which has been 2536, we need this correction and consolidation. It's happened, but I believed as of this morning, and I went public to say it, I believe that correction and consolidation is now behind us. However, there's still some technical charts that would argue differently. So if you really want to feel safe that we're past this correction, wait till it trades 2 times over 2400. Then all the technical charts will have turned bullish. But irregardless of that, even if there is still another 100 or so decline in it, the upside is still much, much larger than the downside. The difference this time, Darryl, I believe, is we're not going to go up as sharp or as fast as we did before. but it's going to be a more steadier increase. And I believe where we'll get the kick in it when it picks up that acceleration is when I believe what's going to be declared this fall from the BRICS in relation to gold. And then the world will wake up and realize, oh my God, this is really happening. And those that don't own it are going to be under pressure by people asking, why don't we own it?
Mm-hmm. Yeah, yeah, that makes total sense. Silver, silver had broken above $30. It closed above $30, which it hasn't done it in a while. Then it's kind of come back to about 28, and it's been hovering there. Do you have an outlook for silver?
Well, those who used to get mad at me because I always said it was second rate compared to gold, in my book, you need to own them both basically on an equal proportion. The fundamental argument for silver has improved tremendously. A lot has to do with the supply deficit of it, but I think people now are going to treat them on equal par as well. And so I don't think it will underperform gold. In fact, if I'm correct, and we have this change in the world recognition of gold due to the BRICS, I think after that, when there's an acceleration by the public in general looking, the public tends to like to buy things more in quantity than quality. Not to say that silver is not the same quality as gold, but if somebody's going to put $10,000 in something, they rather have 10,000 shares of a dollar stock than 1,000 shares of a $10 stock. And that's where the silver is always more mindful to the retailer. They can own more, they can so-called stack it and that kind of stuff and all. But I really do believe that it warrants equal representation now. It's no longer going to be brought up by gold. It's going to run the race together and maybe even at some times lead the race.
Got it. Got it. Yeah. I've still been stacking physical silver. I haven't really gotten back into the equities yet. I kind of got shaken out of the equities. I did start getting back into the royalty and streaming companies, just as a safer play. However, like I mean, the miners have still been struggling significantly, but I continue to hold like the physical. Do you dabble with the royalty and streaming companies?
Well, we were having a great conversation until you reminded me the performance of my mining and junior restock portfolio. And that always brings me straight back to earth quickly. It is the most befuddling event that I can recall in 40 years. That even now, with pure explanations, I believe there's legitimate explanations to explain why metal prices could have gone so well, and yet mining shares, and particularly juniors, where you go down the food chain, have not, compared to what they've done in previous years. Real quickly, the few key ones is we just don't have the same type of players we once had in it. Individual financial advisors who built part or all their book around buying and selling individual stocks, in this case, mining and junior stocks, are gone. You just don't do it. There's no economic feasibility for them to do that because the handful of people that still may be willing to pay what used to be a decent commission, that's a dinosaur. The second issue is that the competition. One thing cryptocurrencies have done, they've stolen the junior resource market's lunch. The people that would have found themselves into the juniors by now because of what they would have seen the metal prices going up, instead have flocked to the cryptocurrency world. And keep in mind this, there's been a ton of money lost in the crypto world. Everybody keeps throwing up Bitcoin, which by the way, in 2 years has gone nowhere as fast. But in those 2 years when it was most heavily marketed, so much money has been lost and just poof. And people say it went to money heaven. No, when money goes poof, it goes to money hell. You don't have it anymore. How could that be heaven that you don't have something that you once had that was valuable? But that's also money that would have found partly its way into that market. And so now, with a smaller amount of people as the end user, that mining company, especially the junior, doesn't have a vehicle where if I get one person involved, I get all their clients involved. They still have to get to those end users who I don't think are there as many now as there once was. And now they have to almost do it on a one-to-one basis. It's 100 times more difficult to be running a junior resource company right now, all things equal, than it was 10 or 20 years ago. Then keep in mind you got other issues. Certain places in the world, do you want to go and invest there? Politically, socially, economically, the things that can happen to you. Regulatory wise, right now in the US, basically, even if it has an OTC symbol, if it trades up in Canada, most brokerage firms, even the discount ones here, are now allowing people to buy the stock. So there's an enormous excusable reasons to understand why there's such a discrepancy, but how's that going to change? Why shouldn't that be not the case a year from now? Because I would have told you the same thing a year ago. And here we are a year later, and it really hasn't changed. I think the things that has to happen is this. One, markets in general need to peak. Even though the stock market's gone up, it's been a very narrow focused on a handful of groups and technology. And I also think the cryptocurrency market would have to be clearly had peaked. So if and when both those things occur, and they don't occur in a crash phase where people just suddenly wiped out and have no ability to transfer, if and when those things occur, we'll see a much better junior resource mining market. But until that time, it's going to be a struggle.
Hmm. Yeah, I've personally been trying to process the a lot of economic data with the rise in unemployment, and there's a lot of rules like the Sum rule, McKelvey rule, that are signaling recession, and so I've been kind of contemplating like, oh, are we going to get another washout, before a restart in commodities and pretty much every other asset. I mean, because we see S&P hitting all-time highs, we see Nasdaq hitting all-time highs, and it just keeps going up. And it's just like this party does not last forever, And so I've been kind of just trying to process that and move with caution a little bit there. What's your take on if we're going into that type of environment or not? What do you see there?
Well, it's a good thesis that you have, but here's what I think the difference is this time around. In previous cycles, there was always ample supply of a commodity. And when a recession came, there was enough out there, boom, the price dropped. The problem is we don't have a lot of above ground supply in a lot of different commodities. Take copper. Uh, Normally you would say, "Oh wow, Pete, you are in this camp of a slowdown. Don't How could that be bullish for copper?" Normally it wouldn't be, but the fact remains is we don't have any really excess supply, and there's been so little money put into it that there's no significant new supply to to overcome and bring that wealth of supply out there where you can say, okay, copper should be back that on the two or whatever number somebody would come up with. The other problem is that the grades, the amount of grade that's out there has dropped tremendously. The average grade has gone from a couple percent down to half of 1%. So what's ever left, there's a lot more rock that has to be moved and the expense of that in order to get the same amount that you used to get. So the bullish fundamentals of supply and demand versus normal economic slowdown kind of kill each other off. That's why I still think even during a slowdown or an economic recession, the copper price will probably at least maintain itself at the 4 level on either side. And if it's not as slow down as, or it becomes even more acute, we will get above 5. But I don't think gold will ever be an economically sensitive. I think it will always be monetarily driven and also politically driven. And geopolitics now, especially as the world is clearly dividing itself up, and more people seeming to move away from G7 than wanting to be G7 or the next G7, whatever. I think gold will be uh, kept at a much better price and not be impacted as some base metals may be impacted based on economic factors.
Hmm. Got it. Got it. Yeah, that makes sense. So yeah, and then obviously, I mean, you touched on copper. We had a big move in copper, and the concern there is the sensitivity to economic conditions and such. And so, yeah, I mean I mean, we definitely need it. Like we need a lot of investment in our grids. We need a lot of investment in just I mean all these clean energy goals and energy goals. Like I mean, it's inevitable that it's going to happen. I've just been kind of processing like, okay, are we going to get another drawback before we can get a boom, and then also like where's the money going to come from to invest?
So Darrell, one of the things I would suggest to you, because you continue to impress me with your continuing educating yourself and all. If I was a much younger man, I think there's an area now which could make a lot of money, and I just don't have the energy at the time or really the necessity anymore. But there's no question that more power is going to be needed. Whether the EV thing is rolled over and it's not going to be anywhere near as they first thought. But the bottom line is the combination of that, the clear movement to AI and the enormability of all the changes that are going to come. First of all, we're all going to have computers that are related to that. So there's going to be a great change in people having to buy new computers and whatever the case is. But the delivery of power, electrical power, is paramount now everywhere. I mean, we're facing brownouts and blackouts now. Can't imagine, given how much ramping up we're seeing in AI and the demand that the power needs that it has. How is that going to be provided? So I think an area to look at is the parts that will make up how you eventually get that from a power station to the end user. People that sell all those parts, the people that repair it, et cetera, et cetera. I think the other unfortunate thing that's going to become more paramount is a battle for water and food. I think the ability to get uh, proper water and proper food is going to become more and more challenging. And those are kind of areas that, regardless of whether markets blow up or not, of course, if there's crashes in markets, you're right, money dries up, liquidity, everybody comes into panic mode. But outside of that, adversity still creates opportunity. And those are markets that I think, if one has the time, uh, will need and still be an opportunity in them. I will tell you this much. I've talked about window dressing at the beginning of June, right up to the end of this. And then I think we'll start to see the market roll over in the second half. And a lot of the gains that were made will be lost in my theory. But I don't think you would want to buy and expect to make money going forward technology stocks in general. It's probably the most overbought, overowned, and talked about. And of course, when it's talked about so evidently, that's the time when you want to be moving out. Uh, and I'm not telling anybody to do this, but if I had to make a gamble, I'd be short technologies and long mining stocks because one is complete opposite. No one wants to own them. The ones that still of us that own them wish we didn't own them, wish we can get rid of them. There's no new money. There doesn't seem any reason why mining stocks should go up. And yet, if you make the case for the Nvidias and things like that, there seems to be no argument why they can't just keep going up, up, and up. I've seen too many of these things. When it gets to those levels, you have to have the contrarianness in yourself. And so, one of the things I wouldn't want to own past today, and that would be these high beta technology stocks that are, basically the Mag 7 groups or whatever. And I'm not telling the average person to go short or buy put options, but if I had any substantial holdings in them and didn't own things like mining stocks, I would find some reason to come out of them and move it into these greatly underperforming stocks up until now.
Yeah, yeah. I mean, I'm reading a book now called Capital Returns, and it talks about capital cycles and how many companies, investors, they media and everything, they pile into these companies, extract pretty much all the growth, The companies tend to get pretty arrogant, and they invest a lot, and then that they start to generate no returns. The returns start to diminish, and then money capital cycles out of that particular sector or that particular company. And so I've been learning about that, and so I've been thinking about in terms of that, like, oh, how high can this go before the gains and the returns start to diminish in these particular stocks and sectors. And so and because it can't just go up forever, right?
So I had a mentor early in my career in the early 80s. I would go on a show, it was called Morton Downey Jr. It was the first, long before there was even crazy talk shows. Anyway, I was brought on to debate this man, and we would end up becoming my financial mentor. His name was Lou Ehrenkrantz. He's been gone for years, but he used to say, always look at stocks as you would look at bottle rockets that you lit come July 4th. And if you remember bottle rocket, if you ever lit one up, it's like a firecracker on a stick. And he said most of them basically go up and blow up in the same area. But every once in a while, he would say, one of them would be like a Roman candle, just keep going and going. But that blew up too, he would say. And that's how you have to look at it. So when you see bottle rockets that turned into Roman candles, then the Nvidias and things that are basically in a straight line up now, doesn't mean that line can't be going straight, but that's not an entry point. He says once it's basically pointing from down to up, when it looks like your finger, he used to point the finger, he used to say, too late to own that stock. The reverse is the same. When something's going like that, yeah, you don't want to catch a falling knife. You want to wait till you start to see it become an L. But that market is so overly bought and sensitive. And you know what that also leads to? Nobel laureates. These are people that have been recognized for their thinking, have done studies, not ones by brokerage firms, independents, and found that 80% of equity money managers and 85% of bond fund managers underperform an index fund, where simply you would have been better off to put it in an S&P 500 index fund than 8 out of 10 managers. And the 20% that do outperform, they never basically do it 2 years in a row. So you can understand why that kind of explains what you said, this herd mentality that always exists. And it never works at the beginning or at the end, but in that middle of it where we've been, it looks like it's a great can't miss. But that's the first sign when you already should be looking out. And you know what the other key sign is, which has been happening, Terrell? Look how much insider selling the last couple of weeks there's been in these stocks. Up until now, they were not selling the insiders. They're aggressively selling now. Now, insiders tend to be early before it actually becomes so acute because they see the pipeline almost at the beginning. They know what 3 or 6 months how things are going to change in the company because they've already seen the lagging, but there's still things left in the pipeline that everybody else sees and go, that's why I can keep continuing. Corporate insiders, when they sell, there's different reasons. Hey, time to take profit. It's the only time we have. But when there's aggressive amount of them selling and large quantities is important, just as when there's buying. Because remember, at the end of the day, there's only one reason somebody bought stock, because they think it's going up. So corporate, when you can see some insider buying, I won't name the company so somebody doesn't think I came here to tout it, but I'll tell you a quick story. I'm invested in a junior. It's has one of the most paramount people, I think, as a major shareholder. And the other day, the CEO announced he exercised all his call options that he was granted when he took it as lieu of a salary a few years ago when the company started or when he took over. And he did so a year or so before they expired. And they were well in the money. It wasn't like he was forced to do it and all. And basically, what he's gambling on is, and he's in Canada, and Canada has this capital gains rule, which is now almost 66%. How do they expect people to be entrepreneurial when the government's going to take 2/3 of whatever you made? I mean, it's kind of crazy. But anyway, by doing this, he has effectively stated that only way it becomes profitable for him to have done that is for the stock to go up a lot between now and that year and a half, because he will already have now paid pre-taxes, and taxes, if it doesn't work or the stock goes in the other direction, he will have lost money. When somebody's in charge of a company and takes that much of a risk, he has to feel pretty good about what he knows, which is about going and so forth. And that's when insider buying, or when you see insiders putting where their money, where their mouth is, and kind of natures, it's one of the lost arts in fundamental analysis of markets that people just don't track as much anymore. But it's still a key factor, in my opinion. And yes, after we're done, I'll send you the name.
Yeah, let's do that. Let's do that. Well, Peter, appreciate you for coming on. I'll be sure to link to your site and your Twitter account in the description. I always appreciate the time and everything, and appreciate the wisdom that you've given us.
Let me just say this. I continue to watch yourself focusing on what's important. You got your whole house in order. You, like me, have built our actions based on a belief of biblical proportions, which I believe without it, we have no shot. That's just my belief, not telling anybody else to have to do it. And in this period of time that I've known you, I've just watched your educational level and understanding grow. And I just hope it keeps growing for you, brother.
I appreciate that so much. All right, man. Take care. God bless.
God bless.